For the month of February, I agreed with myself that I'm gonna place only one trade per day, and those trades are going to be a 3-to-1 reward to risk ratio trades. So this week I'm doing a weekly review of all my trades from this week, and I will talk about how I did. So this week I traded, let's see, today I traded pins. Yesterday I traded Twitter. The day before I traded AMU. On Tuesday I traded Tesla, and on Monday, the first day of the month, I traded AIMT. I had a winning percentage of 40%, so I won. I'm keeping track of my trades. So I won two of my trades and lost the other 3 trades. But because I stuck to a 3-to-1 reward to risk ratio, I'm still profitable on the week. So we'll start with pins, today's trade. So pins was in play today. I did not even check the news, but the stock was in play because the volume was significant. It gapped up, but I was short biased on pins because of the first bar, which is a trending bear bar, a bear bar that closed on its low. So I was patiently watching it, and once it made a second low, so this is the first low. This is the first low. So so it made a low right here, a first low, and then it pushed higher, made a second low, meaning that this bear bar went below the low of this bullish bar. So I went short with my stop at the high of my entry bar, and it did go in my direction for a bit, but then I was stopped out. And so this was today's trade, which resulted in 1% loss of my account. So in the start of the week, I traded AIMT. It was in play, and I believe AIMT was in play because I guess they had a vaccine for the coronavirus or something along those lines. So I saw that despite this huge gap, it sold off to the 20 EMA, and I went long at this high too. So this is high 1 because of this bear bar went above the prior bar, and then so let's see, what did I do here? I went long here because I thought it was going to test, the 50% of this sell-off, and my stop was the low of this bar, and I was stopped out. So that was the trade on at the beginning of the week on Monday. And then on Tuesday, the following day, I traded Tesla, and this Tesla trade was actually, I'm very proud of this Tesla trade. On this Tesla trade, it pushed higher, and then once it made a low 2, so meaning that it pushed higher. So this is the low 1 because this bar went below this bar. So this is a low 1. I waited, and then it made a new 5-minute high, but then it made a new 5-minute low. So this is a low 2. So I went short here with a stop right above this my entry bar, and it gave me it wasn't quite 3-to-1. I don't know why, because I'm using hotkeys that tells it to take profit after I reach 3 times of my risk, and I pretty much got filled at this EMA. So this Tesla trade was a winner, and this 20 AMA is magic. It stocks tend to want to gravitate to this 20 EMA. MU was on Wednesday, and MU the same play as that Tesla play. So this was a low too. So the stock sold off, and then it bounced. It made a new 5-minute low right here, which is a low one, and then it made a new 5-minute high, and then it made another 5-minute low, which is a low two. When I saw that, I went short with my stop at the high of my entry bar, and it sold off, and I got filled at my 3-to-1 at a pre-market low. This line right here is pre-market low, and after that it bounced and pushed higher. So so this was a very nice trade, which I'm proud of. And yesterday was Twitter. Twitter was it gapped up on the daily chart. It was in play because of its quarterly earning, and I went long here after this low one failed. So it made a new low, but this new low failed. So the people that went short here, they were trapped. That's why it pushed higher. But I bought too high, and I was stopped out for 1% of my account. And of course, after it stopped me out, it pushed higher and it hit my target. So these were the trades today. 5 trades, 1 trade per day, sticking to a 3-to-1 reward to risk ratio. I'm doing this for the entire month of February to see how I'm going to perform, just sticking to 1 trade per day, 3-to-1 reward to risk ratio. So far, this has been a very relaxing week, not stressful at all. I just place 1 trade, and if it works, it works, and if it doesn't, oh well. I only have to be right about 40% of the time to be profitable with if I stick to this, and my intention is to stick to this because last month, January, was kind of a emotional month where I overtraded. I was glued to the screen, and I pretty much was slightly negative on the month of January, which was my first negative month in about 4 or 5 months. So that was frustrating, and I needed to make some tweaks to my system, and I did a bunch of back testing that told me that if I had stuck with my first trade of the day and gave it a 3-to-1 reward to risk ratio, I would be super profitable for the month. So in February, this month, I told myself that we are gonna do just 1 trade per day and stick to a 3-to-1 reward to risk ratio, and let's see what happens at the end of the month. And I mean, it's not easy to only do 1 trade and walk away. Like, for example, today, when I wanted today to be a winner, so when my trade on pins was a loser, I contemplated making a second trade, but then I looked at this and told myself, we can't ruin this plan. We can't ruin this calendar. We have to stick with the plan until the end of the month, and we'll see what's going to happen. So I'm gonna do weekly reviews of my trades. So my next recap of my progress is going to be next Friday, and I will do this for the entire month of February, and then at the end of February I will do a full review of my performance. If you have any questions or comments, feel free to comment below, and I will see you guys next week. Peace.